Time now for our regular Monday market update, and we're starting off with Ghana. We saw the bulls charging last week on the Ghana Stock Exchange from a closing of 5,841 points on Monday. The bourse gained just over 2/3% over the week to end just over 5,080 points on the close on Friday. Just over 317,000 shares were traded on the day, led by the banking sector. EcoBank Transnational made up the bulk of the day's trade, with just under 45% of the total shares traded. The stock traded flat at 14 pesos. Meanwhile, EcoBank Ghana was the biggest trader at just over 17% of total shares. The stock was also the day's biggest gainer, up 1.3% to end at 385 cedis. Ghana Commercial Bank had over 13% of the market share on Friday. The stock was also on the list of gainers, up 3.4% to close the day at 91 pesos. SSB Bank made up almost 8% of the day's trade, ending flat at 45 pesos. Well, joining us on the line from Accra, Ghana, for details on the Ghanaian market is Winston Nelson. He is from African Alliance, and he's going to give us an update. Winston, thanks so much for joining us.
Thank you for having me, Susan.
Winston, what is the driving factor behind that uptake in the Ghanaian market?
I think big news from corporate results that have been released so far. There was also big news behind GCB. The government paid back half of the debt that GCB had advanced to TOR, which has been outstanding for some time now. And that drove the activity in GCB both down and up during last week.
And there are a couple of AGMs, and as you mentioned, Ghana Commercial Bank, where we did see renewed interest in that counter, the counter really clawing back 3.4% after government announced a partial payment of debt owed to it on that Tema oil refinery. Can you just take us through that and what happened in that AGM last week?
Okay, with the GCB story, government through the Tema oil refinery had been owing GCB about 900 million Ghana cedis. What happened was that government had agreed to pay off the debt, and on Thursday it issued a report saying that it has settled about half the debt. So that gave GCB some impetus during the trading. Of course, during the AGM that was held on Friday, most of the shareholders were not happy with GCB's results, and they made their impact. They made that clear to management. But management assured them that government was willing to pay the debt. Half has been settled, and the other half is they envisage the other half will be settled as soon as possible. In terms of what they look forward to in this year, because they have received a huge capital injection, they're looking at making loans and promise better results. Other shareholders also complain about dividend payments, and management promised that if the results turn out to be what it will be, for the first time in a long while, GCB is going to give them some interim dividend as well.
How much does government actually still owe GCB, and when do they expect to repay that amount?
What is outstanding is about 403 million Ghana cedis, which works to be somewhere about $300+ million. In terms of the timelines, the management were not also very sure when government was going to pay, because no firm timelines has been disclosed. However, they expect that this will be settled maybe in the next 6 months.
Okay, another AGM that is expected this week is UT Financial Services having their AGM tomorrow, and they're looking for consent to acquire UT Bank as part of sort of government's or the central bank's plan to really focus on getting that capital adequacy ratio up to where they want it. What do you think is going to play out there?
I think in terms of what UT Financial Services proposing, just a little background on the transaction. UT Financial Services is owned by two shareholders who also acquired somewhere last year a majority stake in UT Bank. It was a local bank. It was a bank called BPI Bank, which they acquired and changed the name to UT Bank. And UT Bank has to meet a minimum requirement of 25 million stated capital by the end of this year. So what is happening is that the shareholders, because they are common to both companies, are considering a merger. So UT Financial Services will issue new shares to shareholders of UT Bank, bring the companies together, and then at least then UT Bank at that point will meet the minimum capital requirement. I think based on the plans that are going to be put before shareholders and the shareholding structure of the companies, I think the UT Financial Service should not have too much problem having that resolution go through.
All right, Winston Nelson, thank you so much for joining us.